Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Today we're talking about the industrial real estate market. And, we've heard from the analysts. Now let's talk to a developer, a builder, an owner of industrial real estate property. Please welcome Larry Callahan. He's CEO of Pattillo Industrial Real Estate. Larry, thanks for joining us in Studio One this morning.
Thank you, Michael. Enjoy being here.
Well, we appreciate it. And like I said, we've heard from the analysts, and they're looking, I guess, sort of the past and the current numbers. But you're talking with the tenants. You guys are on the front line talking to the tenants. What do you see? What do you think is we're going to see moving forward in the industrial real estate market from your perspective?
Well, I think I'm going to be your most optimistic guest of the day because maybe that's one of the reasons that I'm a developer rather than an economist. But generally, I listen to the same data that we were listening to earlier. And if you listen, we were hearing low vacancy numbers. I mean, numbers that are better than they were in the last big upcycle. That's a good signal to us. And, we're talking to tenants. The reason the vacancies are low is that people need more space than they have. The economy has continued to grow. It's been growing at a slow pace, but it's been continuing to grow, and that's a very positive thing. And it leads to a point in time where you have relatively little space out there for the next deal that comes along, whether it's a foreign investor or a foreign company coming in, getting ready to build here and expand their presence, or a U.S. company that's reorienting their supply chain, whatever it might be. There's relatively little out there at that point, and that's actually music to the ears of a developer. I am talking to a lot of other developers who are seeing the same thing, and in most strong markets, and all markets aren't the same, but in most strong markets in the United States, what you're seeing is either a wave of speculative development or a wave of it being planned. And I see a strong market developing.
So you're seeing a lot of confidence in these companies and these tenants you're talking to, and they're making a lot of plans right now with developers like you to expand and create more jobs and grow?
I do. I don't want anybody to think that it's like this has been more of a tortoise economy than a hare economy. Mm-hmm. We're not exploding, growing at 7 or 8% like China is. But what we are doing is continuing to grow at a steady pace and absorbing what is in the market. And the only way that we can move forward, I think it was one of your guests was saying we got a supply constraint that's starting to creep into many markets. Well, the way you address that is you start building new things. So real estate developers can sometimes build the wrong thing or too much of the right thing. But I think everybody has been through the experience of the downturn and come out maybe a little wiser, and people are being very thoughtful about what it is that they're building, and the market is clearly calling for new product in a lot of segments of the market.
And where are you seeing new spec development right now, and are you guys building spec?
I am seeing it in most of the major markets. The major distribution markets are, from Los Angeles, Chicago, Dallas, Atlanta. Those markets are all feeling strength and improving, and confidence is returning, both to the people that like to build, like developers, and to the people that supply money to them. So I think we're seeing strength all over in that regard. So I'm optimistic about a lot of markets as we're going into 2015. And yes, to the question, we are building speculatively. We've actually built speculative buildings for the last couple of years, and we built some in the Greenville, Spartanburg, South Carolina area, and moved the building before we even got the foundations in to a good user who is now talking to us about expansion. So we're seeing it. It's not I'm not telling the whole world to run out and build 100 million square feet of space in a market that only has 100 million square feet. But we've been through an extended period where we've been undersupplying new space. The downturn hurt a lot of people and made a lot of people cautious, and there's residual effects of that. And what we're seeing is a slowness now to jump on the opportunity. And we think that now is the moment to start providing new product.
And the capital's there, right? You mentioned that lenders are confident and they're out supplying cash to help all this growth happen.
Well, there's a lot of sources of money, equity money and debt money, but pause and talk about banks for a second. Banks went through a very difficult downturn, and what is on a bank's balance sheet is loans. And if they went through a difficult period, they tried to collect on those loans. They collected on those loans. They built up cash. And now how does a bank make money? Well, they make reasonable loans to reasonable people. And they're sending those signals to our tenants who are seeing opportunity and are willing to grow. The capital is available to them. So it's not just from the real estate side of things. It's from the customers. They're positioned to grow.
Okay, well, fantastic. Well, stay with us. We'll have more on the industrial real estate market. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back to the Commercial Real Estate Show. I'm Michael Bull. We're talking with Larry Callahan with Pattillo about the industrial real estate market. And Larry, again, you're firsthand. You're talking to these tenants. You're seeing the market every day. What are some trends you're seeing on lease rates and lease terms today?
Well, first of all, I'd have to say, as a developer, we love our tenants and our customers. But I will say that one of the things that has happened here in the last couple of years is we've been in a market that has been for a long time very much a buyer's market. There was a lot of available space, and that created an atmosphere that was easy for a tenant to get a lot of concessions and a lot of flexibility in their deal. There's still a lot of people that are very interested in doing business with any real deal that's out there, but this market is shifting as we get into tighter lower vacancies, and the demand is exceeding the supply. That shifts the strength of the negotiation a little bit back more toward the developer. So we are seeing fewer concessions being granted. We're seeing an increase in rental rates. We're roughly at the point now in many markets where the rates are back to where they were before the downturn, and they dropped significantly. When the downturn happened in 08, 09, you were seeing a lot of markets where the going rental rate was dropping 20-25%.
Wow.
But things have just slowly worked their way back up, and we're at the point where in most markets you're back at a rental rate that's similar to what it was before the downturn. In some markets it's already above it. In the Texas markets, I think you're seeing some numbers above it. A number of other markets are that way. And we're at the point now where we don't see as many concessions as far as free rent is concerned. We don't see as many concessions as far as the termination options, things of that nature, which were fairly common during the downturn because everybody was cautious. And at least part of the reason you're not seeing as much of that is the companies simply have more confidence in the future, and they're wanting to go ahead and lock in a rate now, in part because if they're really savvy, the factors that are in play right now are pointing toward a market where rental rates will be higher in the future. So you're really wise to go ahead and lock in, a good rate today compared to a rate that's likely to go up in the future.
I agree with that, and I think in most commercial real estate sectors today, that could be the case, or at least in most markets. I think tenants should look to lock in long-term leases if they can. And you talked about rate growth. You're getting rents that are back prior recession rates. And how does that impacting new construction today? I guess new construction costs are going up. How's that working for you?
Well, one of the reasons, and there was a couple of segments earlier, you were talking about a lack of supply. In many markets, one of the reasons there was a lack of supply was that the prevailing rental rates didn't justify building at the cost that exists today. So even through the downturn, a whole bunch of things turned down, but the cost of construction wasn't one of them.
Yeah.
It was a brief moment for a year or so, maybe. There were a lot of supply, But things were being built in China, and demand for concrete and steel and whatnot stayed up, and we simply are seeing increases in construction costs to the point where the prevailing interest rates in a lot of market weren't justifying new supply. Well, that sets the stage for the prevailing rate to go up, because if you want the new building, it's going to have to be at a rental rate that is a reasonable return for the person that takes a risk and builds a building.
All right. And Larry, you talk to and see a lot of tenants that are in the market, and if you will, let's provide these tenants some advice. So they're looking to grow their business, they're looking for new locations, they're scouting sites. What are some tips? What are some best practices that you've seen work well for these tenants in the process?
Well, start early is the first thing, and get good advice as you're trying to move into a new area, a new facility. There are some great brokerage firms. I'm sure you know some.
Yes, thank
yourself.
you.
Yeah.
Yes, I do.
But that's what you need. Is you need advice as you're trying to do this. Find people that you can trust. Bet on communities that give you the clear signal that they want you to be there, and do that early in the process. I can't tell you how often we talk to people, and by the time they're finally meeting us, they're way behind in the process. Mm-hmm. And then they in turn put that pressure on us to try to build a building that takes 7 or 8 months to build. They want it built in 3. And we try our dead level best, but it's important to start early, start making commitments as to where you want to be, and then work your way through that process as early as possible. And also, if you're going to move into an existing space, after 5 or 6 years where there was a lot of supply on the market, there's a tendency to assume that whatever you want is going to be there. Mm-hmm. And that was the case for 5 or 6 years. I mean, we all are, humans learn from their personal experience, and there was a lot of signs up and a lot of space, but look around and check again, and you're going to find that a lot of markets have tightened up. When you start getting vacancy rates in the 6% range, they're just particularly the type of space that you're looking for just may not be available right now. Yeah. So again, I think that points toward a need to provide new supply, and I think developers are all gearing up to do that. The ones that I know are all talking about that or actually doing it.
Yeah.
And if you want to see an example of a place where a lot of it has happened, go to Dallas. Mm-hmm. They got 20 million square feet of industrial buildings up right now, mostly big box, and they're ready to go.
Yeah. Well, it'll be interesting to see what happens. And I think that's great advice as a number one tip for tenants in every sector is to start soon. I think, when they are busy in their business and they're good, successful business leaders, and they don't realize how long the process can take to negotiate a lease and build a building and get your permits, and it can take a lot longer than they think. Well, stay tuned. We're going to talk about the investment market. The industrial investment market has certainly been hot with cap rates compressing. We'll be right back. This is the Commercial Real Estate Show. I'm Michael Bull. Stay with us.
The Commercial Real Estate Show is brought to you in part by Florida International University. With FIU's Fast Track system, you can earn your master's in real estate in just 10 months without interrupting your career. Visit FIUonline.com to learn more. That's FIUonline.com.
Welcome back to the Commercial Real Estate Show. I'm Michael Bull. We're talking with Larry Callahan, CEO of Pattillo Industrial Real Estate, about the industrial real estate market. And Larry, let's talk about the investment market. You own a lot of properties. You're also out there looking to acquire properties. What are you seeing in the investment market as far as cap rates and demand?
Well, there's tremendous demand for first-class industrial property. The cap rates continue to be compressed. There's reference by Renee Cirque in their earliest article of today's show where he said that he's seen sub-4 cap rates. I mean, that's amazing. That's lower than what they were in the last cycle when it was all heated. Mm-hmm. So the investment market has been red hot for a while now. Just a hunger for a steady return. And you've got a lot of money that's behind this. A lot of investment companies, insurance companies, are all trying to allocate more product or more money into the industrial product. So a lot of demand, and that's driving up the competition for particularly trophy-type properties. But what has happened is there's way more money out there than there are those trophy properties. So the demand is spreading out to other locations and to properties that are maybe not the million square foot credit tenant with a 15-year lease. They're spreading out and looking at other property types within the industrial sector. So it's a red hot market, and it has been for quite a while. If you talk to somebody who is in the investment sales side of the business, they just can't believe this is happening, and they don't know how long it'll continue. But it has clearly been the hottest part of the market.
Okay, so if we have some sub-4 cap rate buyers, bring them to your properties, right?
Yes, sir. We'd like to talk to them. Yeah, give them my website address, and please contact us.
Okay, and where are some opportunities in the investment market? You're talking about maybe some of the secondary markets, or some of the properties that aren't quite as sexy. Maybe time to look at moving some of those because the market's hot.
Well, one of the things that we're seeing with a lot of developers, and I'd say it's almost all, went through a downturn, went through a period where it was relatively little new investment being done. And during that period of time, everybody studies their portfolio and tries to figure out, okay, here's what we did during the last cycle, here's what worked well, here's where we are right now, and we'd like to reallocate our resources to another place. So one of the things that you're seeing in investment buying is holders of real estate, developers of real estate, are reallocating their resources and making some properties available for sale, and that's an opportunity for somebody else because what you may be getting out of, somebody else may be getting into. It's what makes the world go around.
That's right. You look at some of the REITs, they're always looking to improve their portfolio to be more of their core type assets. So they're going to buy some properties and sell some properties. There's always some movement out there, right? Mm-hmm. Well, what about existing users who own their facilities? I guess it might be a great time for them to consider a sell leaseback if this market is that hot, right?
Oh, absolutely. I mean, this is, if you are an owner of industrial real estate and you have any urge to sell something, this is the time to be doing it. It is a seller's market as far as a leased industrial building is concerned. Yeah. So it's an opportunity for somebody who want to do that. Sales and leasebacks, that would make a lot of sense for a lot of companies if they're trying to unlock capital in order to grow their business.
Yeah, give either one of us a call and we'll make it happen, right? What about
Absolutely.
A quick tip? The show's about to end. Quick tip for our listeners.
Well, one of the things that you're seeing on a lot of places is that companies are moving to attract talent. Mm-hmm. It used to be that you graduated from college and then you tried to move to where the companies were, and that may have been, somewhere that maybe wasn't number one on your list, but it's going the other way now. So pay attention to the places that young people want to live.
Larry, thanks for joining us today. We appreciate it.
Mm-hmm. Glad to be here.
For more from Larry, visit PattilloRE.com. And thanks for joining us on the 40 stations on iTunes and on YouTube. Be sure and join us next week. The show's Associations That Matter. I'm Michael Bull. Until next week, be sure that you always lead, learn, and laugh. And join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's RealNex. FIU, Florida International University. Earn your master's in real estate in as little as 10 months without interrupting your career. Visit FIUonline.com. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.